Welcome to a fresh episode of Legal Wrangle, where we will track major judicial developments in the realm of domestic taxation. For this, we have selected three important cases. First, where mandate of time limit for serving notice under Section 143 Clause 2 is similarly applied to reassessment proceedings. Second, where additions came to be made on account of doubtful purchases of shares at premium even when buyer company is having meagre income. And third, where penal provision of Section 43B was invoked for failure to pay nomination charges to state government. The assessee in our first case had approached the tribunal challenging the reassessment made by the income tax officer by solely relying on the report of the investigation wing and without gathering pertinent documents and record relevant statements so as to translate the suspicion of investigation wing into conviction.
Let's see what the final outcome of tribunal was. Firstly, mandate of serving notice under Section 143 Clause 2 within 6 months from the end of relevant assessment year as per proviso to Section 143 Clause 2 is equally applicable to reassessment cases as well. Secondly, the AO having once formed an opinion in the course of original assessment is not permitted to change his opinion through reassessment proceedings. Thirdly, allegation regarding escapement of income by reason of failure on the part of assessee to disclose fully and truly all material facts is sine qua non for initiating proceedings under Section 147. Lastly, notice issued under Section 148 on the basis of defective approval under Section 151 and consequent assessment made on the basis of such notice is bad in law.
Now let's move on to our second case, where additions have been made under Section 68 of the Income Tax Act on the basis of increase in share capital, including share premium of the company. This addition was supported on the premise that there was immediate transfer of funds to the lender company before making of advances, which created doubt regarding the genuineness of the transaction.
Let's see what the final outcome by the tribunal was. Firstly, mere presentation of documents of incorporation of company and making payment for application of shares through bank is not enough to justify genuineness of transaction. Secondly, purchase of shares at high premium by a company having meagre turnover is sufficient to infer presence of accommodation entries and hence paves way for invoking Section 68. Lastly, taxpayer is obligated to explain satisfactorily the nature and source of credits appearing in his books of accounts.
Now let's move on to our last case, where a state government undertaking was denied deduction under Section 43B just because it had failed to pay the nomination charges and levies within the stipulated time period of 9 days of filing the return.
Now let's see what the tribunal has finally decided. Firstly, limitation period prescribed under the penal provision of Section 43B restricting transgressions of delayed payment of government dues is also applicable to special levies like nomination charges created for specific purpose by state government. Lastly, once rigors of payment within the time schedule under Section 43B is out of picture, then acceptance of special levies like nomination charges for a given assessment year will only depend upon the accounting method followed by assessing.
With this, we wrap up this episode of Legal Wrangle. Until next time, keep watching TIOL Tube for our upcoming episodes. Thank you for watching. Goodbye.